Welcome to the Travelex Weekly Outlook for November 28th. The dollar finds itself on the wrong end of a risk rally. We have seen stocks and other higher yielding assets like the euro and the Australian dollar really take off to start the week. This is coming on signs that maybe Europe is moving toward a solution to the debt crisis, and on signs of robust U.S. consumer spending over the weekend to kick off the holiday shopping spree for the holidays. So anyway, that has the dollar on the defensive as investors move away from safer assets. But last week, we did see the dollar really rise to early October highs. This came after more worrisome news out of Europe. We did see governments over there struggle to raise funds or do so at affordable prices. So that spurred some safe haven demand for the U.S. currency. We even got some disappointing numbers from across the globe. We saw that manufacturing in China slowed for the month of November. And even the U.S. economy advanced at a slower than expected pace during the third quarter. So that all really worked in the dollar's favor as investors preferred safer assets. But for the coming week, the final one of November, investors will keep their eyes on Europe. That's where many top Eurozone countries will release or will have more government debt sales, so that'll be something that'll be closely watched. Investors have really used those government debt sales to gauge signs of a broadening crisis in there. If we do see that bond yields continue to rise, that would tend to put more pressure on the single currency. Then out of the U.S., the focal point is going to be on Friday's jobs report. The U.S. economy is seen cranking out a little more than 120,000 jobs for the month of November. If we get a number that fails to meet that expectation, we would tend to see investors become a little bit more unsettled, and that actually might work in the dollar's favor by spurring some safe haven flows. But that's going to do it. Feel free to check us out online.